Implementing an employee stock ownership plan, or ESOP, represents a significant strategic undertaking for any private company. It is a complex process that demands careful consideration and expert guidance. However, an ESOP offers a unique blend of potential benefits. These advantages extend to both the company itself and its dedicated employees, fostering a shared sense of ownership and purpose. Successfully navigating this intricate journey requires a clear understanding of each key step involved. This guide will outline the practical stages to help you implement an ESOP effectively. The initial phase of ESOP implementation begins with a thorough feasibility study. This critical assessment determines if an ESOP is the right fit for your organization's future. You must first assess the alignment of an ESOP with your company's overarching strategic goals. Consider how employee ownership can support your long-term vision for growth and succession. Evaluate your company's current financial health in detail. A robust financial standing is crucial for supporting the ESOP structure and its ongoing obligations. Analyze your employee demographics to understand the potential impact and engagement levels. Consider the age, tenure, and overall composition of your workforce. A comprehensive company valuation is essential at this stage. This provides an initial estimate of the business's worth, which is fundamental for structuring the ESOP. Review your cash flow projections meticulously. The ESOP will have financial implications, and understanding future cash availability is paramount for sustainability. Carefully consider the potential tax implications for both the company and selling shareholders. ESOPs offer significant tax advantages that should be fully explored. Next, define the ESOP's proposed structure. This includes determining the percentage of ownership you intend to transfer to the employees. Establish clear employee eligibility criteria. Decide which employees will participate and when they will become eligible for the plan. Outline the vesting schedules for employee shares. This dictates how and when employees gain full ownership rights to their allocated stock. Engaging experienced ESOP professionals is non-negotiable from the outset. Their expertise is vital for navigating the complexities. Secure qualified legal counsel specializing in ESOPs. They will ensure compliance with all relevant regulations and draft necessary documents. Retain financial advisors who understand ESOP transactions. They will assist with financial modeling, structuring, and funding strategies. Finally, engage independent valuation experts. Their objective assessment of your company's value is critical for the ESOP's fair establishment. A crucial step involves engaging a qualified independent appraiser. This professional will determine the fair market value of your company's stock. This valuation is a cornerstone of the ESOP transaction. Based on this appraisal, you will establish the precise price at which the ESOP will purchase shares. This ensures a fair and compliant transaction for all parties involved. Your legal team will then draft the comprehensive ESOP plan document. This foundational document legally establishes the plan and its operational framework. The plan document outlines all rules and regulations governing the ESOP. It details how the plan will function and the rights and responsibilities of participants. It specifies employee eligibility requirements, share allocation methodologies, and voting rights. It also defines the procedures for distributing benefits to employees. Ensuring compliance with the Employee Retirement Income Security Act, or ERISA, is paramount. ERISA sets strict standards for employee benefit plans to protect participants. Furthermore, your legal team must ensure compliance with all other relevant federal and state regulations. This meticulous attention to detail prevents future legal challenges. Funding the ESOP typically involves a combination of sources. The chosen financing structure will depend on your company's specific circumstances and objectives. Your company may contribute shares directly to the ESOP. This can be a tax-deductible contribution, offering significant financial benefits. Alternatively, the ESOP may purchase shares from existing shareholders. This provides a liquidity event for owners looking to transition their ownership. Explore various financing options to fund the share purchase. Bank loans are a common method, often structured with favorable terms for ESOPs. Seller financing is another viable option, where the selling shareholders provide a loan to the ESOP. This can offer flexibility and tax advantages for the seller. Often, a combination of bank loans and seller financing is utilized. This blended approach can optimize terms and manage risk effectively. The ESOP trustee, acting on behalf of the employees, then purchases the shares. This transaction formally transfers ownership to the ESOP trust. Conduct careful negotiation and documentation throughout this phase. Every detail of the transaction must be legally sound and clearly recorded. Ensure compliance with all legal and regulatory requirements during the transaction. This diligence safeguards the integrity and legality of the ESOP. Once the transaction officially closes, the ESOP is formally implemented. This marks the beginning of your company's journey as an employee-owned entity. A critical next step is to educate your employees thoroughly about the plan. Explain its benefits, how it works, and their new rights as owners. Ongoing administration is essential for the ESOP's continued success and compliance. This involves several key recurring tasks. Annual valuations of the company stock are required. This ensures that the share price for employee accounts remains current and fair. Regular share allocations to employee accounts must be performed. This process distributes new shares or revalues existing ones based on plan rules. Meticulous record-keeping is vital for all ESOP activities. Accurate records are necessary for compliance, reporting, and employee statements. Continued compliance with ERISA regulations is non-negotiable. Regular audits and reviews ensure the plan adheres to all legal requirements. Given the complexity of these tasks, many companies choose to hire a dedicated ESOP administrator. This is often a third-party firm specializing in ESOP management. Maintaining a successful ESOP requires continuous proactive management and transparent communication. This fosters a culture of ownership and engagement. Communicate regularly with employees about company performance. Share financial results, strategic initiatives, and operational updates to reinforce their ownership stake. Inform employees clearly about the ESOP's value and their individual account balances. Provide statements and educational resources to help them understand their growing wealth. Ensure the ESOP is properly funded to meet its future obligations. This includes repurchase obligations for departing employees, which is a critical long-term consideration. Periodically review the plan's performance against its initial objectives. Assess its impact on employee morale, productivity, and company profitability. Make adjustments to the ESOP structure as necessary for continued effectiveness. The plan should evolve with your company to remain a powerful tool for success. Implementing an ESOP is undeniably a long-term commitment, not a one-time event. It requires sustained effort and strategic foresight from leadership. However, the benefits it offers can be truly significant. These include enhanced employee motivation, fostering a highly engaged and productive workforce. ESOPs also provide substantial tax advantages for both the company and selling shareholders. These financial incentives can be a powerful driver for adoption. Furthermore, an ESOP serves as an excellent succession planning tool. It offers a structured and internal pathway for ownership transition, preserving company culture and legacy. Ultimately, successful ESOP implementation demands careful planning, expert guidance from specialized professionals, and an ongoing dedication to its principles. With these elements in place, an ESOP can transform your private company for generations to come.